Hello, everyone, and welcome to another episode of NFA Live. It is Thursday once again. It's rolled around quickly. Thank you all for watching. Thank you all for tuning in. It's good to see you again. Today, I am joined as ever by Ben and Rob. Rob with his brand new green screen.
That's right. I mean, I can change it
I
if
like
you want to. I can put it back to this. I can do this. It doesn't really matter.
Oh, that's fantastic. And Ben in his nuclear bunker.
It's where I always am, so.
It looks good. It looks good. You're safe from all the above ground terror. Okay, so let's.
What's that, Ben? What'd you say?
I just said I'm safe from the degens down here.
Nobody's safe.
No one's safe.
There's not a single crypto community that can get to you down there, Ben. You're good. You're good. Okay, cool. We've got a few things to talk about today. I want to get a little bit not philosophical, but I want to kind of talk a bit about what might lie ahead for sort of crypto in general. But before that, firstly, I should say if you don't already follow Ben and Rob, then you should definitely consider doing so. And their details will be all linked to below. We'll kick off. I'd like to start. Yesterday was CPI numbers over in the US. So a measure of the inflation measure that we all pay such close attention to. So before we sort of get into the rest of the questions, Ben, do you want to just give us your thoughts on those numbers and where you think that leaves us?
Sure. Let me share my screen. I don't know if you guys can see that. But
let me add it.
Yeah, I mean, look, inflation's going in the right direction. I think that's a good thing. I think the Fed is going to be very slow to cut aggressively. Actually, you can look at the CME group here. The market's mostly just back to pricing in a 25 basis point rate cut, which I think is probably the right move. I mean, I know a lot of people were worried a couple of weeks ago when we had that Monday where, the markets were tanking and Bitcoin was at 49K and, the S&P was getting hit pretty hard too. But I think that 25 basis points, unless something, big happens between now and September, I think 25 basis points is going to be the way to go. Obviously, we're going to get another unemployment rate print between now and then, so we'll see what that does. But I think this is the dilemma for the Fed, is that it's great to see inflation coming in below 3%, right? So you can see June 2.98, July 2.92. Powell has often said he does not want this to be a repeat of the 1970s, right? He does not want to make the same mistakes. And therefore, because of that, you have to go back to the 1970s to see what he's talking about. There's a period right here where inflation in the summer of the election year, so pretty similar to today, right? The summer, you can see that inflation in June and July dropped below 3%. And then in August, it was still below 3%. But then the Fed loosened up policy too quickly, and then we got another wave of inflation, right? So that, I think, is the dilemma for the Fed. And that's probably why you're not seeing, despite the fact that the unemployment rate is moving higher, right? I mean, it's, the Sun rule triggered, right? It's well off its cycle low. And I think a lot of people would say, well, the Fed really needs to start cutting to get ahead of this. I think that the Fed's more worried about cutting too soon and causing something like this to happen, where you just see kind of that runaway inflation again. Now, there's also the other end of the spectrum, which is what happened in the 1940s, which probably doesn't get as much coverage as we should give it. I think it's natural to just sort of compare to what happened in the 1970s. But in the 1940s, we had a period with high inflation, and it was basically caused by all the money printing, following World War II or in World War II, to finance the war. and we also got a big spike of inflation, and then it came back down to the 3% level, but then we went deflationary, right? We went below zero. If I just draw a line across the screen at the zero, sort of the zero bound, you can see that instead of getting a second wave of inflation immediately, you actually had a deflationary crash. And then you did get another wave of inflation, but it ended up being a much lower high compared to the first one. So I think that's why it's so hard for the Fed. It's so hard to get it perfect, right? To just have a soft landing where you just sort of slowly come in back to 2%, because it's easy to overshoot and cause a deflationary crash, and it's easy to cut too early and cause what happened in the 1970s, where you get, a second wave or even a third wave of inflation. Now, with that said, I think it's fine to be, it's fine to be optimistic. I mean, I think that Powell has done a great job. I really do. I think Powell has done a great job so far. Yes, we're certainly not immune to bad things happening, but I think they're making the right decision, and they have made the right decision. I think it still has been too premature to cut, but we know that, I've talked a lot about all Bitcoin pairs. Those they give the warning when the Fed's going to cut. They did last cycle. They're now breaking down, and so I do think it makes sense that the Fed will cut. But again, because of those concerns that you see back in the 1970s, that could limit what the Fed actually does this year. So a couple of weeks ago, the market was essentially saying we were going to have 125 basis points of rate cuts before the end of the year. Now it's back down to only 75 basis points of rate cuts. So we essentially went from 125 to 75. So 50 basis points is now gone. So I kind of think, I honestly think it's going to be really, really similar to 2019. And I've been making this 2019 comparison all year. And what happened in 2019 is the Fed gave us 325 basis point rate cuts. That's what happened. So, if we do follow 2019, it's possible that you get 125 basis point rate cut in September, one in November, and one in December. And if that happens, then it'll almost be 2019 on repeat. So I think for now that should be the most likely outcome. You would have to get some pretty bad data between now and September 18th, or so yeah, September 18th, the next FOMC. You'd have to get some pretty bad data between now and then, I think, for the Fed to go to 50 basis points. Now, one thing that could cause it, I guess, is if the unemployment rate comes in at 4.6% or something, like if it really starts to accelerate, then fine. 50 basis points is probably warranted. But we just got the UK unemployment rate numbers, and it actually went down. So if you see something like that happen in the US next month, then it could certainly pave the way for just a 25 basis point rate hike, or rate cut, I should say, not rate hike. But yeah, that's kind of how I see the inflation. And the last thing I'd like to say is, if you break it down by category and you actually look at the contributions per category of inflation, essentially 2/3 of the headline number that we're seeing is coming from housing, right? So the green part of this, inflation year over year, this green part, it's all coming from housing, which housing is very much a lagging, indicator, right? It lags essentially everything else. But if you just look at it per category and not the contribution, because it's weighted differently, but if you just look at it per category and you look at housing versus headline inflation, you can see that housing often lags, right? Headline inflation tops out first, and then housing inflation comes down after it. That happens quite a bit. And so you're seeing the same thing happen here, right? Headline inflation topped out first, and then housing inflation's coming down after it. So it's lagging, and the good news is that it should continue to come down, which should provide, should help bring CPI lower, ideally as we get into the end of the year, and help us distill the worries of at least an immediate second wave of inflation.
Just to touch on the data itself, which seems to be coming in sort of more positive, if you like, for for the future outlook. I mean, have either of you guys, and I'd be interested to know from people in the comments as well, have either of you guys sort of noticed anything changing sort of on the ground, as it were, where you are? Like, have you noticed prices going up or down? Have you noticed anything particular getting more or less expensive? Because I think, I think this kind of leads into the next thing I want to talk about, which is what the future of crypto might look like. And I guess if people are getting hammered by high prices, then that is going to have an effect on crypto and people entering the market. So have either of you sort of experienced any sort of big declines or increases in prices recently?
I have. First of all, let me just say what a great job Ben does on explaining CPI. I watched his video yesterday and it was great, because sometimes I think to myself, why can't the Fed do this? Why can't the Fed do that? And then Ben reminds you, like, hey, Jerome Powell's doing a pretty good job for what he's got with the S show that he's dealing with. So great job to Ben. As far as like on the ground, that last screen that Ben showed, that last graph for housing, I see it. Like, for some reason, the last month or so, I've been called by my different agents in Puerto Rico and Houston saying, hey, this property that we have is down 10%. This property that we have, like one, there's one that we were looking at. It was a 6-unit apartment that you could transfer into condos with a commercial property at the bottom, which was a restaurant. And they were going for, I think it was 2.6 or 3. And now they're down, like they just cut it like 500K. Again, like, hey, do you still want to look at this? I'm like, well, absolutely. But then looking at what I just saw, I'm like, well, maybe I'll just wait, because it looks like prices are going to go down. And that, of course, is one of the issues that you have with not disinflation, but deflation. Prices start to drop so much that people are like, well, I'll just wait a little bit and then see if I can get a better deal. And then, of course, that hurts the industry, and then it's just a big snowball effect. But I have seen it, and I don't know what other people have seen, but that's just in the real estate sector. Right.
And of course, deflation is something I think governments sort of fear more than inflation almost. I mean, a deflationary spiral can be a lot more destructive. And I mean, that's something that Japan has been stuck with deflation now for decades, and has basically, seems to have stagnated in that time. Although it now seems to be entering a slightly more interesting period, as we saw last week.
I think one of the issues with deflation is that it does not encourage spending, right? Because if we're deflationary, that means your dollars are worth more tomorrow than they are today, right? And so if your dollars are worth more tomorrow than they are today, then you're just encouraged to hoard dollars rather than spend them. If you're for the most part, we're always confident that dollars are going to be worth less tomorrow than they are today.
Yeah.
Therefore, it encourages people to spend and invest, and that's what makes the economy go round, right? I've seen, I still see insurance prices going up. Like, I haven't really seen insurance go down. I have seen some like retail areas drop prices. Personally, I haven't actually like noticed, because they're still extremely high prices compared to where they were a few years ago. But if you at least read the headlines, you'll see that certain retail stores, I think like Walmart and Target, and maybe even McDonald's, I don't know, but certain stores have started to lower prices, because I think they realize that they can't just keep raising prices forever, right? At some point, the consumer revolts, right? And the consumer says, enough is enough, and we're not going to keep paying higher and higher prices. And that's when the businesses have to then lower prices. And obviously that could have an effect on real GDP eventually, right? Because,
Right.
if everyone's pricing in all this growth, and then all of a sudden they have to lower prices, that can obviously have an effect on their bottom line. But I think I've seen prices come down in certain areas, and then in other areas, like, property insurance, car insurance, like, it just, the insurance industry just seems like it's continuing to go higher. Also, with the real estate, I think it's very, Rob would know this better than anyone here. I think that it's very location specific, right? I mean, some areas You look in Florida, the pricing, the housing market looks like it's absolutely collapsing, because the people, the insurers don't want to actually insure the homes anymore, or they're doing it at much higher costs, and the people just can't afford it, so they're trying to offload it. But if you go to other places, housing market looks perfectly fine. Like I'm on I'm north of Florida, but the housing market looks fine here. We haven't seen any big drops in housing. I think if you go out to like some areas like Austin, and maybe Phoenix, I think prices have come down in the real estate market. But those were also the ones that experienced the biggest boom back in 2021 and 2022. So I think a lot of things are just trying to slowly get back to normal, and yeah, that's kind of where we're stuck at right now.
Yeah. Cool. Thanks, guys. Okay, I want to move on to a sort of more crypto-focused question now. Last week, I remember we were discussing where we are in the cycle. We were discussing when market conditions for crypto might improve, when we might see this alt season that we're all looking forward to. And I've got to be. I remember we had a sort of broad consensus that sort of towards the end of this year and early next year, I think the three of us were sort of largely agreed. That's when that's when things are sort of we expect things to be improving. But I've got to be honest with you. If there's one thing that keeps me up at night, other than the fever I had last night, is what if crypto market conditions don't improve? What is crypto's future going to look like if this cycle doesn't play out like the previous ones? I.e., if we've already, for instance, had the bull market that was, that in retrospect turns out to have been triggered by the spot Bitcoin ETFs back in January, or whatever it is. How is crypto going to sort of move forward? What's the future going to look like if this time is different? Rob, do you want to start us off with that?
I'll say, well, first of all, before I start going, Ben, could you pull up on your site? There's a ROI, Bitcoin market cycle bottom ROI.
Yeah, I'll pull it up.
And what I'll say is this. Well, one thing is that I guess I'll be sticking around for a little bit longer. My idea was, once we go to this blow off top, was to put out the video. I sold 80% of my crypto, and I'll be back in the bear market. So looks like people are stuck with me for a while. But if it doesn't, huh?
I have the chart.
Great. But just like what Ben was talking about, and he says this perfectly. He said, if you match it up, because I know what people are thinking right now, like, damn it, well, now we have this problem with Japan. Now we have World War III on the horizon. Now we got another monkeypox something nonsense that's coming on. So it's gonna, everything's gonna crash, and we're gonna have a recession, and we're gonna miss this whole cycle, and it's gonna be awful. But I think we said the exact same thing back in 2020 when the coronavirus came in, and we're like, oh, this is gonna last forever. It's gonna be awful, and it just seems to repeat. If you're taking a look at this, click on the, you have market cycle 5 and overlay that with market cycle 3 in logarithmic fashion.
Yeah.
And just see how it kind of lays over almost perfectly. It seems like, and this is looking at the bottom, and this would be from November of 2022 up to today's date. Of course, it's cut off because we're not at the very peak. And if we're looking at the other one this would be cycle 3. This would be at the first part, which would be all the way back in, what is this? 2013, going all the way to 2015, going back to 2017. Yeah. And so, it doesn't look like the last one, but I've always said, the last cycle didn't make much sense to me. I think there was too much leverage, too much shenanigans, too much Voyager, Celsius, BlockFi, FTX nonsense going on in the background, Three Arrows Capital that kind of screwed everything up for us. And we got screwed out of a proper bull run. I think it's kind of matching up just like this one was. And this one was the big one that got me into. I don't know about the people who are watching at home, but I just kind of see this, when people say it won't happen, first of all, anything can happen, right? So we have to mentally prepare for that and say, hey, what if this does happen? That means that it's going to kind of be a pain, but if you would have followed some basic advice by not YOLOing into meme coins and crazy nonsense of like the top 600 altcoins, you'd still be up pretty damn big just with Bitcoin alone, and some different alts. So if you're there, it's good, and if you're not, guess what? Now you get to accumulate more, because who knows if it gets extended out. I still think we'll still see it, but we have to mentally prepare and say, okay, if this happens, I do this. If this happens, I do that. As long as you're there mentally, you'll be okay. But I still think we're on track.
I'm glad to hear that. I'm glad to hear that. Ben, what are your thoughts? What does it look like for crypto? What happens? What shape does the crypto market take if in your crystal ball, if you like, if we don't see the same, like for instance, retail not coming back in force like they have in previous cycles? How do you see that panning out if that's the case?
So I'll say this. I mean, there's two things you can look at, right? There's the macro, which obviously doesn't really look that great. But in all fairness, it hasn't really looked great in a long time, and the market still hasn't, didn't really seem to care. If I were not looking at the macro at all, right? Like if the macro just wasn't a thing that I cared about, which frankly it probably shouldn't be. But if I just didn't look at the macro at all and I just looked at the chart, and I try to figure out like what is going to happen, I would say this. I would say, and I've been very hard on altcoins for a very, very long time, right? And I've said for a long time they're just going to bleed to Bitcoin, just stick with Bitcoin. But last cycle, dominance, and I'm gonna get to your question, but I think you have to understand it through the lens of dominance. Last cycle, dominance topped out in December of the halving year, right? And we're only a few months away from that, right? We're only a few months away from December of the halving year, and I keep thinking, well, what's going to cause dominance to top out? Well, theoretically it's going to be looser monetary policy, which is coming relatively soon. And so when I look at that, and then I overlay it with the dollar, and I'm going to try to put a bow on it so it all seems to make sense. But if you look at like the dollar, I was looking at this earlier. The dollar looks like it might be, because Rob just pointed out the similarities between this cycle and the 2016 cycle. If you look at the dollar, the dollar has dropped a lot recently. I wonder if it's about to repeat what happened in August of 2016, where it also got a pretty big drop. And then right starting in August, it then began its final move up. Okay. Its final move up. And guess what? It topped in December. Okay. So the dollar got a move, started in August, topped in December. Why do I care about the dollar? It's not because of the Bitcoin dollar correlation. Well, maybe in a second, but the reason is because if you look at alt Bitcoin pairs, I've said this before, I think they're oscillators at best, right? They're oscillators at best, meaning they still need to theoretically drop this remaining amount to get to the range low. This is altcoins against Bitcoin. We know that altcoins track net liquidity pretty closely. So if you overlay net liquidity onto the alt Bitcoin chart, you'll see that they actually track fairly closely, right? As net liquidity goes down, the alt Bitcoin pairs go down, meaning Bitcoin dominance goes up. The reason why alt Bitcoin pairs are tracking global net liquidity, and the reason why I brought the dollar into it, is because net liquidity, I'm calculating it by adding up the balance sheet of various central banks. But because the balance sheets of various central banks are in their local currency, we have to convert it to US dollars. And by doing that, it means that you need to know how the dollar is performing. And that's why DXY is important. So if this does play out like the 2016 cycle, which Rob was talking about, you would almost expect the dollar to rally into the end of the year, all Bitcoin pairs to finally go to the range low. But the nice thing about when the dollar gets those rallies and it tops, then it goes down for like a year. And every single prior alt season that everyone keeps talking about occurs when the dollar is dropping very quickly, right? And that's where you get your theoretical alt season. So one of the things that I've looked at a lot is, you know, we've talked a lot about Bitcoin and you know, how Bitcoin basically went down to its logarithmic regression trend line. If I can grab it here. So I'm trying to figure out where it is. So if you look at Bitcoin's logarithmic regression band, you know, this is something we talked about, you know, a couple years ago or something, but basically it had to go back down here and then it put in new all-time highs, right? The issue for the altcoin market, and this is what I've said forever, and this is why I've said, you know, you have to be careful. It's easier just to stick with Bitcoin until looser monetary policy arrives. The issue, I think, is that, you know, it's hard for the altcoin market to get moving when ETH Bitcoin is, you know, is still in a downtrend, right? In order for alt season to occur, ETH Bitcoin has to turn around, and it hasn't turned around yet. I think ETH Bitcoin is going to be in the process of putting in a bottom between now and the end of the year, meaning it could go lower than where it is now, but I think it's going to bottom somewhere over here between 0.03 and 0.04, and it already went to 0.04. So it's possible it's already bottomed, but if it has, and it's going to still, you know, tag those lows for a while, I think that it's more likely that it does go put in one more lower low, kind of like this move in 2019 as the Fed started to cut rates. You know, ETH Bitcoin got one final push and then it eventually went down. I think that this is theoretically going to turn around. Now, again, I don't know how much in the weeds you guys actually want me to go on this, but I would say I would say I can stop. I don't. I'm
No. You got to
This is
keep going,
good,
man.
man.
You got to keep going.
Okay.
Yeah.
All right. I'll keep going. Just comparing it to 2016, right? So if you look at 2016 and also 2019, you can see that there was two prior times where ETH Bitcoin broke down, right? You know, right here in 2016 and in 2019. And so that is arguably what is playing out right now. And that's why everyone feels so crummy about altcoins, is because ETH Bitcoin is breaking down. And that's what I've been so concerned about for so long. Had I known it was going to take this long, you know, I would have tried to better prepare myself. I wasn't thinking it was going to take this long, but you can see that it's actually happening again. The reason why this is important and why the altcoin market hasn't really picked up is because if you go look at ETH USD, I think you could see something play out like this. Now, it's a kind of a scary chart, but I'll explain why. If you look at ETH USD in 2016, after ETH Bitcoin broke down, ETH dropped 70% from that top, 70%. If you look at 2019, from when ETH Bitcoin broke down, ETH dropped 70%. Now, remember the logarithmic regression band I showed for Bitcoin? If you show it for Ethereum, you can see that ETH actually never went to the logarithmic regression band like Bitcoin did. So Bitcoin went to it and then put in a new all-time high. ETH has not put in a new all-time high, but it also hasn't gone to the lower logarithmic regression band. If you take I know 70% drops sounds scary, right? But it already dropped 50%. You know, I mean, it already dropped 50%. Yeah. If you look at ETH USD, it already made a 54% drop. So if it repeats into the end of the year and you get, you know, something kind of like what you got over here in 2019, then that could get you back to say like the fair value. And then perhaps after everyone finally gives up on alt season and you see ETH USD down here, that's when alt season finally occurs, because now you've had, you know, ETH Bitcoin ending its multi-year bear market. You could have the dollar topping in December. And then you're also going to flood the markets with, well, you're going to give the markets lower interest rates and also quantitative easing. So again, if I didn't know anything about the macro, that is what I would say is the most likely outcome, right? You know, you basically see ETH USD struggle. And by the way, there's one more thing, and stop me at any moment because I'll just go on forever. But there's one more thing. If you look at ETH USD in 2016, I keep bringing it up. Rob mentioned it in August of 2016. Look at this, August of 2016 compared to August of 2024. So you have August 2016 right there, and then you have August 2024 right here. In August of both of these halving years for Bitcoin, ETH tagged the upper part of the regression line, right? So you can see it wicked down to it in August. Right. And then in September, we had a green month, right? So maybe September will be green. And then October, November, December, were red. Everyone gave up. I remember. So back in 2016, I remember it was depressing. Like when this was happening, I didn't know what was going on. It was depressing. And then all of a sudden it completely turned around. So that's my base case right now is that something like that happens. And I don't know if September is going to be green. The only reason I bring it up is if you look at futures, if you look at futures, you can see that Bitcoin futures, there's this gap that already got filled by Bitcoin, right? So there was a gap from that crash in early August that Bitcoin already filled the gap, but ETH has not filled it yet. So ETH has not filled that gap, and that gap goes back up to around $3,000. So look, if we repeat 2016, then you could still see ETH trend up into rate cuts. And the reason why it's interesting, 10 more seconds. The reason why it's interesting is if you look at what happened in 2016 with ETH USD, that final local top that was put in September before the final crash, before alt season finally arrived the following year in the post-halving year, that top was put in the week of September 19th before the final crash, September 19th. The reason why that's important, the first rate cut is coming September 18th. And a lot of times the markets, right as rate cuts arrive, they sell off. They sell off into rate cuts because they're like, oh, crap, the Fed's cutting rates. Well, what did they do now, right? Okay, it's going to be a deflationary crash, whatever. So I think that's the most likely outcome, right? The markets hold up until maybe about mid-September, and then rate cuts arrive, the market sells off into the end of the year, and then theoretically alt season occurs in 2025. But again, I don't say that lightly. It's going to depend on that's ignoring the macro, and maybe that's what maybe ignoring the macro. That's just looking at the chart, right? Looking at the chart. You could also argue the chart accounts for the macro.
Right. Hey Ben, while the Ethereum maxis are processing that, could you just pull up the time and wristbands for Ethereum just so we can see? Because I'd like to see just how actually, if you take a look at that one, or you can take a look at the one in the history. But where are we today?
For time and wristbands?
Yeah, where are we today? Like right now?
So Bitcoin risk is 0.5.
Okay, and then Ethereum?
ETH risk is 0.55.
It's pretty good. Where we were at back then in 2016, as far as risk levels, as it dropped in October.
Right around the same.
Amazing.
0.5. So that's what I'm saying. I think ETH could do something like this, where it sort of it does okay until September, kind of rally into the rate cut maybe, and then get a final sell-off into the lower regression band, and then maybe move up next year. And again, Rob's right. The ETH maxis have been at my throat for the last 3 years because of my views on ETH Bitcoin. But I do think ETH Bitcoin will bottom before the end of the year. And there's a small chance, I would say there's already like a 10 or 20% chance that it already has bottomed. But if it has bottomed, I think it'll probably at least do a double bottom before the end of the year. I think you'll see one final move lower by ETH Bitcoin, and then next year I think ETH Bitcoin will go up.
Bravo.
Awesome.
Well done.
There's a few takeaways I think from that. So TLDR is that this market, I get the impression, is determined to shake out all but the most convicted people before those rewards come. So you've got to really hang on by your fingernails. The other takeout is that, well, anyone watching can see why Rob and I lift so much information from Ben's website, because it's awesome.
It is awesome.
And
I steal from it daily.
I just wonder whether I have to know whether are the ETH maxis the worst lot to be to have at your throats? I'm sure there are worse legions of crypto people to have after you, but those ETH maxis can be pretty strident. Great, thank you for that, Ben. That was great. Ben, I know you're sort of a little short on time, so if you need to duck out, because there's a couple of other things I just wanted to touch on as well. But if you need to duck out, just feel free to do so, and Rob and I can continue on. But The other thing I wanted to touch on briefly, and I know this touches on politics, but we don't need to actually get too deep into the political side of things. But obviously, politics is dominating the discussion at the moment. So my question is, if the next White House administration, whoever that may be, is either indifferent or hostile to crypto, then is that game over? What next? How do things shake out from there? Because it's the fact that the current administration has been so anti-crypto has definitely not helped in the last few years. And there's no guarantee that the next White House administration, whoever they be, are going to necessarily be crypto friendly or all that engaged. So what happens in either of those scenarios? Rob, do you want to start us off there?
Well, let me have Ben have a crack at it because he's got to go pretty soon.
Yeah, I'll answer what I think, and then I'll head out. I don't really think it matters. I mean, that Bitcoin and crypto has been around under both administrations, Democrats and Republicans, and I mean, just look at the chart, right? I mean, there's not a period where I feel like we can say, oh, well, that administration really killed crypto, or that administration really killed Bitcoin. I don't think that stuff will have a huge effect. Obviously it can have, I'm not saying it has no effect, right? It does, but I don't think that, and even then I think politicians are slowly coming around. I mean, I think that on both sides, I think they are slowly coming around. And I said this before, I mean, politicians that probably won't be politicians for too much longer because they'll get voted out of office eventually. Once the people that care a lot about crypto, as those numbers grow, then they'll have a larger voice, and they'll be louder about it. I don't know if it's going to have a huge effect this cycle, but it could. I don't think it makes a huge difference. I think that a lot of that stuff only serves to essentially make the industry stronger. Maybe helps us focus on what we actually need to focus on. Because I mean, right now I kind of see like I see certain certain parts of the industry doing really great things, and then I see other parts of the industry just rugging their community members every single day. And I think that we're going through some growing pains right now. I think the industry as a whole is going through some growing pains, but I do think we will get through it. And I honestly don't really think it matters. I mean, again, that's not a political statement. I think that crypto is not beholden to whatever administration is in office. I mean, you look at the chart, you wouldn't look at the chart and know like, oh, that was when that party was in office. You wouldn't know, because it's kind of, the cycle's been the cycle the entire time. So that's my opinion. I don't think it matters, but I do have to head out now, guys, and I will see you guys next week.
Adios.
Thanks,
Good job, Ben.
Adios. Yeah, see you soon, Ben. See you soon. Yeah. I got to say, Rob, I mean, that sounds, you might have a different opinion to Ben, but I mean, that's really reassuring to hear that, I think, because crypto has, as Ben says, if you just look at the chart, then you wouldn't necessarily be able to tell who's been in charge. And I guess there's a sense that if crypto can come through a hostile administration and still be doing, still be building stuff, still be moving forward, then that is, it's the hottest fires forge the strongest diamonds, or something along those lines. Do you agree with Ben, or do you think the political side of it is going to still have a big effect?
No, I mean, here's what it's going to affect. The political side will affect the politicians, and it's like it will go negatively against the United States, because depending who comes in, we'll see how it goes. But Bitcoin is not in the United States, as much as like I like to think of it, because I'm an American. I think everything kind of comes through here, but it doesn't. It just doesn't really. It matters a little bit. It matters if Operation Choke Point 2.0 becomes Operation Choke Point 3.0, and it slows things down. But what it means is that everybody just goes to the different countries, and they start to build and start to use everything within Bitcoin, other ecosystems, and just kind of flourish on that one. It's the same thing like when we saw with the internet back in the 90s. If it wasn't for Section 230, which allowed for these websites to, if somebody posts something illegal or something a little bit too off kilter, they couldn't get sued, and allowed them to flourish. If we could just have some regulation, it'll just speed things up, but it is inevitable. It's just, we just want it now. We would just like it as fast as possible. And it's not going to be like that. It's going to be an upward battle, and just accept that's how it goes. So I guess there's two ways to look at it,
Yeah.
you know, and I just think it'll take some time. And last thing I'll say is this: don't trust any politician, because there's a reason why they're politicians, and they make promises. How many times have you believed in a politician and you're like, oh, they're going to do that, and then you're like 4 years later, like, what the hell happened? I thought you were going to do this thing. Sure.
Yeah, absolutely. And then I guess that opens up the other thing to consider, is that obviously a friendly environment for crypto in the US is all well and good, but of course, there are other markets, aren't there? There's hugely exciting developments happening in other parts of the world. Asia seems to be a real hotbed for crypto, as we found out. I got a real sense of that at Token 2049 last year, and I noticed that a lot of big conferences are happening in Asia this year, like a lot of project-specific conferences. I think it's Solana, Aptos, and Sui. At least those three are all doing their big events in Asia this year, or their next big events in Asia, which I think says a lot.
No, it says big because why would they build here? It makes no sense. There's too much uncertainty. So yeah, and I was just talking to Jesus Martinez. He has Classic Crypto, and he's going to those. He's going to Korean Blockchain Week. He's going to Singapore 2049. It's one other one, because he goes, it's Web3 gaming is huge over there. I'm going to represent that. He goes, but I wouldn't go here because no one really is that big into it. So yeah, but I'm here in Las Vegas, matter of fact, for Rare Evo. So if you guys whoever is watching is in town, let me know. And maybe a little meetup or something like that. But I'm excited to take a look at what's going on here, what's in Web3 gaming, to meet the team at World Mobile Token, because I've been talking to Mickey and those guys forever. And now I get to go to the EarthNode operator, private session. It'll be fun.
Fantastic. And are you going to meet Charles himself?
The greatest person in crypto as far as marketing? I hope so. We'll see.
I think he'd be. I chatted to him on a space a while back. Was it this year or no? It was last year. Really interesting guy. I mean, he's one of those people you get him talking about anything, and he can just go. It's brilliant. Oh, yeah. I think he'd be he'd be an interesting person to meet. But that leads us very nicely, actually, almost seamlessly, into the last thing I wanted to ask. And I think, given that you have been to a few of these, Rob, much more so than me and much more so than Ben. So Bitcoin Nashville was last month. We all got very excited about that. Token 2049 is coming up in Singapore. Korea Blockchain Week. We got all these, like I mentioned, Rare Evo happening now, the Cardano specific conference, Solana Breakpoint, Sui Basecamp, things like that. All these project specific conferences, as well as these general conferences as well. So, are there too many of these crypto conferences? What do you think, having been to a few now?
I think there's too many if the vendors don't show up and pay for their spots. I think that's what it comes down to. No, but seriously, like it seems like most of them right now are at capacity, and there's a lot of people, so there's a lot of interest. And it's kind of like you at home watching this video. It's good, it's nice, right? But when you go to a conference, it's good to see like what the innovation is and what people are doing and what the mentality is. And you can't get that sense and that energy from at home. And you kind of just venture out and go to one. So all I can say is as long as like too many, sometimes there are, but we'll see what the energy level is with here. But so far, the ones I've been to, Consensus, Nashville, Bitcoin conference, and this one seems to be holding up. Maybe we'll see, just like how Ben was talking about, as everything kind of builds, we hit a crescendo in 2025. So I mean, if you think there's a lot of
Yeah.
conferences now, wait till 2025.
That's kind of what I was thinking, because we've talked about it on this show, and in general a lot. Retail interest hasn't arrived yet. The market has been very much in the doldrums. Sentiment is low, and yet there are dozens of conferences every year for this industry, which is really pretty tiny in comparison to sort of almost everything else. I had a great chat with someone who was at the time writing for CoinDesk in Singapore last year, and she said, I sometimes think, because we were talking about, she'd been to like several other conferences before, and we were talking at a conference, and she said, my suspicion is that the crypto industry exists solely to support the events industry. Which I thought, I hope that's not crypto's killer use case, but it strikes me as, I guess I should see it as a positive, really, shouldn't it? That even with sentiment this low, like even with market conditions as they are and all the challenges crypto's faced, like there's still so much demand for it. There's still, people are still wanting to get out there and meet each other and make deals and do business and things like that. And conferences seem to be a very good way of doing that. It's certainly a great way to meet people. I mean, I've only been to a handful now, but they've always been such good fun, because it's so nice to meet people who either watch your stuff, or who are just interested in crypto generally. It is good fun. I have to sort of steel myself from going to them, because I think I'd quite, in a parallel universe, I'd quite happily go to these things all year round. Travel the world, as some people seem to do, the world going to crypto conferences. I just have to, if it wasn't so disruptive for work and stuff, I think I'd go more. But yeah, they definitely have their pluses. I just think it's so hard to keep up with all of them.
Yeah, no, Guy, you guys got to stay there at Coin Bureau. Keep putting out great videos so I can understand what the hell is going on in the macro world and these different projects. You need to do your job, and then I'll come to these little conferences and tell you what's going on.
Deal. So you can be our sort of our man on the ground, if you like. Sounds
good, buddy. We'll do that.
Awesome. Well, Rob, I think that's as good a place as any to wrap it up. But so enjoy Las Vegas. Give everyone there my best, and let us know what the vibe is at Rare Evo.
Absolutely. All right. Thanks, everybody. Thanks for coming in. I appreciate you. Guy, get better. I know you're working through a fever, not feeling too great. So see you next week. I think I'm pretty sure we're on Ben's channel.
Yeah, I believe so. Okay. So we'll see you in the cryptoverse.
Adios, everybody.
See you, everyone. Thanks for tuning in. See you soon.